So how are you going to replace a 1.4 billion automobile fleet with a market that's only supplying that few amount of electric vehicles? You're going to need so much silver to accomplish that. You're going to need triple-digit silver just to get the miners to start working to try to get that metal out of the ground. We don't even know if we could actually produce that amount of metal, even if we had triple-digit silver.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and quite excited to have one of the leading figures of the silver industry. As you can see, I'm joined today by Keith Neumeyer of First Majestic Silver. Again, I might add, Keith was the one mining executive in my book, The Big Silver Short. I think probably everybody watching this show has a lot of respect for you, Keith. Obviously, you're doing great things running First Majestic, but also standing up for the things that are going on in the world and free markets. And pleasure to have you back on in here. It was great to see you at Silverfest, even if it was digital. But how's everything going with you today?
Yeah, I really liked Silverfest as well. I watched a lot of your interviews of other people, and I was online for a couple of days watching the event, and I think you did a fantastic job bringing everyone together. So that was great to see.
Well, thank you. I guess when you get all the people we had involved, you're going to get a good outcome. And I think that's what's nice about silver. There's a lot of passion. It stands for something more than just, an investment, the sound money, and all the other things that people believe in. So do want to get to the some First Majestic topics today as well, although perhaps something to start off with. I'll bet people would love to hear Keith Neumeyer's silver forecast for 2021. Doesn't necessarily have to be a price target, but anything that you're expecting based on what we're seeing right now.
Well, silver prices should be probably 4 or 5 times where they're currently trading. If it wasn't for the paper markets, I think, the metal itself would be much, much higher. But, we saw the gold and silver prices smash in the last couple of weeks, and it's all to do with the paper deliveries. And it's pretty shocking the way in my opinion anyways, the regulators just sit back and let the big, shorts of the big traders, the big banks, manipulate these markets the way they do. The deliveries for both silver and gold are quite high, and obviously, the people that are on the short side of that trade don't want to deliver the metals, and they try to discourage people from doing that by doing these big dumps as what they did just in the last couple of weeks. And then lo and behold, December 1st comes, and we have a huge rally, bounce back, and because the pressure's off the dealers or the shorts, they don't have to worry about it anymore until the next month. And it's this reoccurring story, unfortunately. But what we can know, I think, anyways, is just the fact that the physical metal trades for such a high premium to the paper metal. You go try to buy yourself any kind of silver, you're going to pay $3, $4, $5 above spot, just to get some silver. And the commercials, wouldn't be getting their silver unless they had long-term contracts. And it'll be interesting to see what happens in 2021, because you've got the miners producing less silver than ever. I think the Silver Institute came out with an estimate for 2020 of somewhere around 750 million ounces of silver, which is the lowest it's been in, I don't know, 5, 6 years or something. And demand is still there. Solar panels, the whole new Green Deal, electric cars are big consumers. An interesting stat that because I've been doing some research on electric vehicles over the last couple of months, and there's 1.4 billion 1.4 billion automobiles sitting on the surface of the earth, and there's 90 million automobiles produced in 2019. That's the last full year of stats. In that year, of that 90 million, there's 2.4 million electric vehicles. So you think, okay, so just round up the numbers. So you've got 100 million cars being produced every year, of which the cities around the world, and many, some cities say 2030, others say 2040, but they want to ban fuel combustion cars from their cities completely over the next, couple of decades. So that's replacing the entire fuel combustion fleet of cars over the next 10, 20, 30 years in an industry that's only producing 2.4 million electric vehicles. So how are you going to replace a 1.4 billion automobile fleet with a market that's only supplying that few amount of electric vehicles? You're going to need so much silver to accomplish that. You're going to need triple-digit silver just to get the miners to start working to try to get that metal out of the ground. We don't even know if we could actually produce that amount of metal, even if we had triple-digit silver, because as far as we know, the metal doesn't exist in the ground. Price does have often an effect on supply, because it would entice the miners to go and try to find it. But a mining company needs a 10-year timeline, to be able to bring a new mine into production. So you're talking about discovery all the way through production. So you need to have triple-digit silver for a decade just to get supply to start to increase to any great degree to supply the demands that are coming as a result of the whole new Green Deal and getting off oil and gas. So I think this year has been pretty interesting. It's shown us kind of the light at the end of the tunnel, and I think we're going to see easily $30 plus silver in 2021.
Well, I think that would make some people happy. Keith, you mentioned the Silver Institute numbers. Did you catch the other day that they are expecting a 318.5 million ounce deficit for 2020?
Yeah, pretty amazing. I haven't actually seen that number, but yeah, I'm not surprised at all. You look at Mexico, Peru, Argentina, Australia, the big producers of silver. They all came offline, and then you've got also grades dropping worldwide, and you've got discoveries almost at zero. So there's a huge problem coming in the silver space.
Yeah, and Keith, now you'll have to forgive me. I went to a public school and got a Wharton MBA, Keynesian indoctrination, so maybe I'm a little slow here. But if we had a 55 million ounce deficit last year, let's say number comes in somewhere around this 320, I would imagine that's going to be good for one of the companies like First Majestic that is actually out there producing silver. And perhaps you can dig into a little bit about the third quarter earnings, especially an interesting one because a lot was shut down in the second quarter. And then you had some great results here. So if you could walk folks through that and touch on the highlights, it'd be great.
Sure. Well, you make my life easy by putting it up on the screen. So thanks for doing that. But
yeah,
125 million in revenue in a single quarter. That's a record quarter for us. That's a huge amount of revenue, and had to do with us holding back some ounces, which I've done historically. Shareholders know that I am price sensitive. When silver prices dropped the way they did in March earlier this year. I suspended all sales of metal. We warehoused that metal until really about mid-June, when silver prices started to resume their uptick, and so that saved the company millions and millions of dollars by doing that, and that revenue was all pushed into Q3. So it's it made Q3 look quite nice, obviously, but we're expecting Q4 is going to be a great quarter as well, and we did come into 2020 with pretty high expectations, and then unfortunately due to the COVID situation, we did lose a couple of million ounces of production. 2021, we expect to have another record year as a result of just resuming all the operations.
Yeah, and especially with the price going up has helped a little bit. Today around $24. Can you put into context the leverage that, people obviously we talk about on the show a lot, here a lot. But can you put any way into context what things look like each dollar the price goes up and how that affects the bottom line?
Yeah, we do sensitivities on silver, gold, the peso, and it's quite amazing how leveraged we are to the silver price. With almost 70% of our revenue from the sale of silver, a dollar move in the silver price has a pretty dramatic impact on our bottom line, in the tune of, in the $20 million type number for every dollar move. And, if all of a sudden, if we see $30 silver price next year, which I think we will, that's a lot of cash coming to our bottom line. Pretty exciting.
And Keith, you don't have to answer this one, but is it fun to imagine what the bottom line would be like with $50 silver?
Well, as an investor, yes, I do think of those types of things. But I am the CEO of a relatively large mining company with a lot of people that work for us, and we do affect a lot of communities around the mines that we are active in. So we've got a pretty big responsibility to make sure that everyone has food on their plate and so on and so forth. So I have to be somewhat conservative in how the business is run. If we ran the business as if we were in a $50 silver market environment, I don't think we would survive very long.
Yeah, and again, that's one of the things I've appreciated, certainly as we've gotten to know each other over the years and following what you've been doing even before that, where, it's good that someone running the company is thinking about those things. And then you can have smart asses like me have a show and I'll talk about $50 silver on your behalf, which, gold was all-time record highs. Silver is still a fraction of the 1980 and 2011 high. So will be interesting to see. Keith, could you touch on the all-in sustaining cost a bit and give folks an idea of how that all works out?
Yeah, sure. We've got two mines that are pretty low cost operations. The San Dimas and the Santa Elena mines. They drag down these costs a little bit, and the all-in sustaining cost is basically a measurement that mining companies try to put out to investors. It's actually a formula that the World Gold Council has put together, and there's a definition of it if people care to look at it. It replaces the old way of measurement. Mining companies used to call their cost cash cost, but it didn't catch a lot of things. But really, it's still a tough way to measure companies because if you measure us against a gold company, for example, that's producing silver, it just depends on how they report it. So the numbers aren't perfect. The best way to look at, I think, any kind of company is look at what cash is being generated by the business. And we ended Q3 off with $240 million in the bank, which is a record amount of cash we've ever had in the company's treasury. And there was some serious cash generation in the quarter. And despite whatever the publicized costs are, it's really that bottom line cash generation is what people should be looking at.
All right, that makes a lot of sense. Another question I'd love to get your answer on, in terms of, let's say, 12 months from now, what is your focus on in terms of what would you really love to get accomplished? And also on the other side, are there any risks that, or downside risks that you're currently preparing to stay out of the way of, and things that keep you up at night a little bit?
Well, silver prices are always, the first thing I do when I wake up in the morning is look at the silver price. Quite literally, literally before I even have my coffee, I go right to my phone and look at the silver price. So, and I do that before I go to bed at night as well. And I've been doing that for 30 years. So,
Yes.
That's what kind of drives me crazy because it's when you're when you're doing budgeting, we try to plan the business over 3, 4, 5 year period, and then we assume that the metal price is going to be X over that period of time, and then all of a sudden that changes, and then we have to change our investment criteria or investment ideas, and it makes life pretty challenging. So what I think makes First Majestic special is our nimbleness. The fact that we can move and shake according to what's going on in the marketplace. And that's what's kept us out of trouble, and that's why we're still growing and been around for 18 years, is because we've been able to weather the storms by changing the business as the metal price changes. So that's the first thing. The second thing is just growing the business. I want to see this business grow, and 2021 should be a record year. We expected 2020 was going to be a record year, but with COVID, it obviously changed things a little bit. But we're investing capital in technology and development and exploration. And we want to see this company become a 30 million ounce producer over the next 2 to 3 years, with the current assets. And then on top of that, we're at about 22 this year, I think. So some pretty serious growth there, just with the current assets we have in our portfolio. At least that's what we're planning for and working towards. When it comes to M&A activity, of course, we're active in that as well.
Yeah, and Keith, I really appreciate what you mentioned there about how you've been doing this for a while, and not the easiest 20-year period. And I think that says a lot. Where especially 2011 and the years following that, which is a challenge to adjust to these things because, like you said, you can't sit there and plan the company around $50 silver when it's at $14 a couple of years ago. Any thoughts on that, or is just a good example of perseverance, or how do you handle that?
Well, yeah, how do you handle it? Well, you have to kind of know that, for one thing, you always have to have in the back of your mind that the mining sector is cyclical. So, despite all the energy that we put into budgeting and planning, you always have to have this kind of, unfortunately, negative kind of, bird on your shoulder that says always watch out, because the carpet can be pulled out from underneath your feet tomorrow. And because I've had it happen to me so many times, and I've been doing this for 35 years, so I've seen a few different cycles, and some have been devastating. So when 2012 came along, our cost per ounce back in 2011. Now, we didn't do all in sustaining costs back then, so I don't know exactly what it was, but let's call it $25 an ounce was our cost back in 2011. You're at $50 silver, and so we're making nothing but money. Our capex that year was $200 million. So we're building 3 mines all at the same time. We had something like 6,000 employees, and within 2 years, 2014 comes along. The silver crashes through $20, hits $16 in June of 2020, and our costs are $5, $6, $7, $8 above what spot's trading at, and we start burning cash like crazy. And over the next 18 months, we had to lay off 1,500 people. We had to stop all our exploration programs, stop all our development, stop all our construction, and it was pretty tough to do, but we did it, and that was because of the nimbleness of the business, and the senior management bought into it. I told them very specifically that we're in a long-term downtrend that's likely not going to correct itself for several years. We just finished a 10-year bull market, which is pretty long bull market. From 2002 to 2012 is probably the longest bull market in my career, so when it ended, I knew it was going to be tough, and it lasted, basically 5 years. And by 2015, by the fourth quarter of 2015, we started making money again. So we lost money for 6, I think, consecutive quarters, and finally we turned the ship around. And we in 2016, and we turned out to be a record year for us, and hugely profitable year for us. And that was because of technology. It was because of righting the ship, from a staffing perspective, and then also some successful construction and development and exploration, which we continue to focus on. And then through good M&A activity over a couple-year period in 2016, and then again in 2018, First Majestic is what it is today.
Yeah, and I'm curious, you mentioned 2011, back when, let's call it April, when the price was rising up to $49, $50. Do you remember what you were expecting then? Did you think this was going to be a short-term peak, or was going to go higher, or what were you thinking then?
I actually did think it was going higher. I remember BMO raised their target to $70 an ounce, and BMO, this is like the mining bank in Canada, coming out with a $70 target. All right, this is fantastic. Just like, so I remember, I think it was April 9th, I believe it was. It was Sunday night. I have to go back and look at the calendar too. But anyway, so the market's just opening internationally, and silver's $49, and so I had an offer in there at 49, selling some silver at 49. and I forget what I sold, and I had an offer at 49.50. My traders say that's sold too. Oh, wow, this is great. And so I said, okay, well, throw some in at $50, and I'm going to go to bed now. Like, it was 11 o'clock at night, and so I woke up the next morning on the Monday morning, and silver was down $6, and I just couldn't believe it. I go, oh my God! And I realized at that point that was it. It was done. It was over. And so silver kind of traded in the $40 range for the next 12 months, and then over the next couple of years, of course, it did what it did. But yeah, no, I was definitely expecting it going a lot higher. I never predicted that silver would have. I did predict silver when I put First Majestic together. Silver was $5, and I did tell people I'm expecting to see $50 silver, and it did happen, of course. But I would have never thought that it would have gone all the way back down to 13.
Yeah, it is hard to imagine. And there you go. There's May 1st. I remember that Sunday night quite well.
Oh, yeah. Okay.
It was interesting because that Sunday was when they claimed that Osama bin Laden had been killed and thrown in the ocean, which was a little odd. And I was wondering, gee, how will this affect silver? I don't know if it did or not, but anyway, it was certainly a night I think most silver investors remember.
Yeah.
And I think what you're saying makes sense about not expecting it necessarily to come down. Yeah, now it's easier to look back in hindsight, but we had, the QE2, debt ceiling was a debacle. U.S. got downgraded. I continue to wonder, even 9 years later and all the time I've spent digging into silver manipulation, if we weren't close to seeing the U.S. financial system run into real trouble then, and were it not for hammering the metals.
Mm-hmm.
Do you think that's possible, that it was close to the brink back then and maybe we're getting close to round 2 now?
It's, I think the financial system, the banking system was definitely in distress. That whole move from the low 40s to basically 50 was short covering. And I know that there's a couple of I'm not going to name names, but maybe over a beer we can chat about it. But I know there was a couple of people that were really distressed, and I'm certain there was phone calls being made, overnight, and saying, look, we got a big problem here, and we're offside X billions of dollars, and we got to fix this like now. And so that's why they picked the Sunday night, when North America's closed and in an illiquid, Asian market, and they all got together. They had a plan, and they took advantage of the market, because they had to. I think because they're protecting themselves, right? And unfortunately, we see that today. We saw that in the last couple of weeks. The same type of action.
Yeah, would certainly be interesting if one day we ever get a behind the scenes of what was really going on inside these governments and banks back then. I can't even imagine.
Your interview with Bart Chilton, said it all. That was one of the best interviews I think you've ever done, and it's really unfortunate he passed away. I'm sure he probably knew his time was up when he did that interview.
Well, it was certainly wild. I remember almost talking myself out of asking him, thinking, will the guy come on or answer questions? And certainly grateful that he did. And yeah, like you said, the stuff is out there. So
yeah.
Keith, I have one more First Majestic question and then a few other ones, but just because I have a lot of people ask this one. So I know not much changes, but of course the Mexican tax deal. And one of the things I took away from Silverfest was when Jeff Clark talked about that, he put in perspective that, okay, yeah, it's an issue that one way or another is going to get resolved. It's a negotiation. The government wants money. Yet at the end of the day, that we're not talking about, like a massive percentage of First Majestic. So I thought that was worthwhile to note. And just because I know people ask me about it often, if you have any comment or update or just a quick status report of how things are looking there.
Yeah, the dispute goes back until, really 2012, and way before we even bought San Dimas. And it's a transfer pricing thing. It's as far as we're concerned, everything is hunky-dory, but obviously, there's others in the authorities in Mexico that feel differently. And, it's really become more of a political situation. where it's we have diplomats and government officials, trying to assist. Well, they are assisting us, and they're just in discussions with their counterparts in Mexico, and we're trying to push it along as best we can because we want it resolved. And we want it resolved yesterday, but at the same time, it has to be fair for everyone, whatever that resolution is, and we're working towards it. We got a whole bunch of people working on it. We got this whole couple of sets of lawyers working on it. There's a lot of energy going into getting that issue solved, and the sooner it gets solved, the better.
Well, I appreciate that. Also appreciate how you're responding to that, because anytime we're dealing with governments, it's one of those things where you're like, what? But I think that's part of being a leader or running a company, where sometimes you have to put your personal feelings aside and do what's right. And I think that's one of the things I'll speak for myself, that I really appreciate about you. Another question that I think would be fun and people would love to hear. Can you explain, so you guys you dig up the metal. How does it get from the ground to the COMEX? What is the steps in that chain?
Yeah, it'd be fascinating. There's a what's that TV program? How's it made? How's it made showed up at one of our mines. Jill Arias, our VP marketing, organized that, and this goes back a decade, and they went through the entire process, and it's quite fascinating. It actually showed up about a year ago again on televisions, which was interesting. So they reran it, but it's pretty. There's so much energy. You see the coins behind me, the coins behind you. There's you look at one of these ounces of coins behind me, and basically in a ton of rock. And think about the size of a ton of rock. It's like 2,200 pounds of rock is a metric ton, and you might get 2 or 3 of these coins out of that ton of rock. So you got to find it first, and you got to make big tunnels to extract it through all kinds of manpower, blood, sweat, and tears, and pull this rock to the surface. Then you got to grind it all up into very dust-like particles. So go through usually 2 to 3 grinding processes to get it down to powder-like material. Then it's got to go through quite an extensive chemical process, and then it gets through a heating process, and then you produce these dory bars, which aren't pure silver. They're still about 90%, 95% at best. Silver, and they're about 40 pounds blocks of silver that we ship to the United States, and in most cases to the refineries, where they refine it into those silver bars that are behind your head. Those are 1,000-ounce commercial silver bars, which go into the COMEX. So, and they get delivered through a set of banks. The banks already run the market, and they buy all our metal. They buy the entire mining sector's gold and silver. It goes through all the banks, and then they kind of manage that market, and then they have the buyers, whether it's Sony or Tesla or Apple or you name it. They have accounts with the banks, and so the banks have the supply for the miners, and they have the customers on the other side.
Well, that makes a lot of sense, and thanks for walking that out. I think a lot of people have wondered how that actually goes, so that was a great explanation. Last one for you here. I was talking with Ronnie Stoifferle of the In Gold We Trust report.
Right.
We talked with him this morning, shockingly, if you can believe it, about silver. And he mentioned that from what he's seeing, the institutional investors, when it comes to silver stocks, are still a little bit in that, well, I don't want to be the lone wolf out here doing it if it goes bad and nobody else is in it. What's your take from the different investment companies you're talking to and the silver market? Are they still on the fence, getting closer to jumping in, or what are you seeing?
Well, I think the investors are quite schizophrenic. I think that it shocks me to I had a discussion just a week ago on a similar type of vein, whereby whether if you're a big institution You know, you got $1 billion that you're managing, or 10 billion or $100 billion you're managing. You should always, in my opinion, have an allocation to precious metals. And whatever that allocation is, I don't know. Every fund manager has different tolerances, but you know, I would suggest that it should be anywhere from 5 to 10% of their portfolio should always be in gold and silver, and that would be a permanent investment. And it's just a hedge against all the other types of things that are going to happen in the marketplace. But instead, what these guys do is they try to time their investments, and they always come in at the wrong time, and they always leave at the wrong time. So they're the worst investors to follow, because they're worse than retail investors. It's amazing, you know, this whole fall over this last, you know, well, since August, you know, when gold, you know, got up to over 1900, you know, there was a rush in, and then over the last couple of months, there's been a rush out. And now all of a sudden, you know, the gold sector's in the bad books again with the institutions because they all lost money. Well, you know, think about how you're investing, guys. Like, you know, you're going to go buy Carnival Cruise Lines for a trade, or you're going to go buy Suncor for a trade. You know, like what, you know, why are you buying Barrick or First Majestic for a trade? You know, pick a couple of good mining companies, and put them in your portfolio and leave them there. But, I don't know, that's my message to them all the time. But they're a bunch of young guys, normally much younger than me, and they've not seen cycles, and they think they're smarter than the market, and they think they could trade gold and silver, but they can't.
Yeah, it's funny thinking about young people in the gold and silver markets. I guess I was in early 30s when I got hooked on this, and had a couple lessons to learn. Not as straightforward as you think, although I really appreciate everything that you've shared, not just on my show, but I love watching the interviews that you do, and really a great spokesman for the industry. So Keith, perhaps just in wrapping up, you can let folks know how they can stay posted, find you guys online, and keep up to date.
Sure. Well, I'm the chairman of a gold company, First Mining Gold. So, you know, go to their website, and there's a good presentation there. It's a Canadian-based or Eastern Canadian-based gold developer, which has got some pretty interesting gold assets. And I'm, of course, the founder and CEO of First Majestic Silver. They go to their website, good PowerPoint presentation there, lots of videos. Yeah, there it is right there. And we try to keep it up to date as much as possible. And I'm available on Twitter. You can feel free to look me up, Keith_Neumeyer. And yeah, feel free to call our investor relations guys, Todd Anthony and Mark Carruthers, at any time. They're always available to chat with people as needed.
Yeah, well, I appreciate that, Keith. And because obviously, I don't know if you heard, Keith, but we have a Silver December to remember that we're creating here on Arcadia. Because I hear silver makes a great Christmas present for basically everyone, isn't that right?
Of course.
And to really get the ball rolling, I'm going to throw in honor of Keith calling. Are you in Canada today?
I am. I'm in Vancouver.
Okay, so I'm going to throw in 2 Canadian silver maple leafs. And for folks, if you'd like to have a chance to win one of those 2, take the link to this interview, tweet it out to First Majestic. I'm sure you can find their Twitter handle. And I'm Arcadia Economic, and we'll get some silver out to you. And Keith, again, appreciate all that.
Chris, we can throw in a couple ounces as well.
All right, folks. Well, thank you, Keith. And there's a little more silver on the table. So go over to Twitter, tag First Majestic, Arcadia Economics, and the interview link. I think nice that other people will get to hear what you're saying here, Keith. And so I appreciate all that you've done. Will be fun to see what next year holds, and I'll be covering it along the way, and I'll be looking forward to that. So thanks for joining me.
Okay, well, thanks for your time, Chris. It was good chatting again, and have a good holiday season.
Well, I appreciate that. You and your family as well. And folks, in case you'd like to hear, Keith took some questions at this year's Silverfest. It's a great talk, and that video is coming your way now.